generally about giving an investment mandate and then go ahead and invest that money in various ways.
Perfect. Perfect. And then with regards to the investment side that you were speaking about, I'm assuming that does depend on what time of the year that is, as well as the market. So obviously at the moment, with what's happening in the Middle East, with the energy crisis coming in now, now the markets are strengthening with the S&P in going back up, even though oil's gone to $100 a barrel, over $100 a barrel again. What does that look like for you? Is it more long-term investments that you look for, or is it does vary between years and markets?
Yeah, you probably have heard this before, and the audience probably has heard this before, but it sounds a cliche, but it really is about long-term investing. Trying to time the market too much like this can be, there's a good bit of analysis, which I can't remember the exact citation now, but effectively, if you're trying to time the market, if you miss 3 of the best days in the market, you effectively lost out the entire year in terms of returns. So the best thing you can do is just try and stay invested as much as possible. And so the core of the portfolio tends to be in very much just broad index investments, and then on the tertiary side, we would then add some extra things like thematic investing. I don't know if you've heard much of that. So that is things like sort of big major trends that you might see in the world, rather than more short-term things like oil. So if I think about a very pertinent trend right now, is AI. It's the obvious thing, but AI and all the things that come with it. So the actual chip process manufacturing itself, or the energy requirements for it, or the electricity distribution, and that sort of thing. So there are other themes like which I invested in the past, like cloud computing, like renewable energy. So these themes kind of they tend to stick around for a while, but when they're in vogue, does tend to sort of ebb and flow.
Okay. And then with that, does that change also with what the client wants and needs, or is that pretty consistent of what you would subscribe to them, if that makes sense?
Yeah, so the majority of the clients I've dealt with are discretionary clients. So that generally just means, look, here's my investment mandate. I'm going to check my portfolio once a quarter, but really I'm just leaving it to you to just make sure that you invest it wisely within the agreed mandate. So they're not necessarily dictating what investments are chosen, as long as we don't breach the risk profile or certain other restrictions that might be in the mandate. The other type of investing style is advisory, which basically just means that you'd call the client up, or they call you and say, okay, look, I'm thinking of X. Tell me your professional views on that, and then it's more of a conversation, and then agreeing upon a transaction if it's suitable.
Okay. And then on the basis of that you're saying that it's a bit of a both, but there is a strong lenient to one side of that. With your current role, as you're very high up, you're an investment director now, is there a lot more decision making with that, or is there more client facing? Does that make sense with you?
Yep. So around sort of 9 years ago, I very purposely took the decision not to speak to clients, not to speak to people. I've been on that side before. My own personal preference is more the technical side of things, being able to look at a portfolio, just manage money, concentrate on the managing money part, and let a financial advisor do the relationship part of it. So, I'm given a piece of paper that says, client X, here's the investment mandate, here's the risk profile, here's the amount of money that's transferring over. Go ahead and do your thing.
Yes, work to your strengths, of course, why not? And then with that, as you said, kind of what you've said there is what do people often misunderstand about your role? Because I know now you're saying that you focus on more the money side and more the analytical side. What is misunderstood about that? Is it not looking long term? Is it thinking about things too short term? I know it's
Yeah,
a repetitive
a
question, I
common.
suppose.
I mean, a common pub question I get is, what stock should I be investing in right now? So I think there's a bit of there's people get the impression that what I do is like very short term trading stocks. Looking at, right, this is today, this stock is down 5 or 10%. Let's quickly invest into that, and then a week later, hopefully it goes up, and we'll sell it. And that image of Wolf of Wall Street when they're on
I
the
know
front.
exactly what you mean.
I think there's a bit of a misconception about that. More realistically, it's around looking at macroeconomic picture. I mean, some kind of the wider trends of what's happening in the world. That's really the crux of my job,
Okay.
or was the crux of my
Yeah,
job.
yeah, I know, I hear you, I hear you. And then moving a bit more to, I guess, how you started to where you went, which is a bit more relevant to us at university. So you started at Bayes Business School, I think I've pronounced that right, said that right.
Mhm, mhm.
And then you moved to a trainee level investment manager, and then now you're an investment director. Can you walk us through that? And from the beginning, did you always want to be an investment director, or was it kind of something at university you thought you would try? And then what you enjoyed about it and
Yes.
XYZ?
So, yeah, I mean, good question. I've always wanted to work in finance. I think that just was because of, look, without getting too philosophical, I think we all form sort of certain perceptions of jobs and things from a childhood.
Mhm.
My images of working in the city were, working professional, working in sort of, fancy offices and all of that. So it was just a bit of a lure to me without not really knowing what the job entailed. And in a way, I kind of wish I went to more society meetings like you're hosting right now. But yeah, wanted to work in finance. Ended up in retail wealth management. Learned from the team there. Within a few months, just wanted to get stuck in with exams, professional exams. So started doing the professional exams, and did sort of various other roles, like more on the kind of sales side of things. More on the my first job was actually more administrative, as you'd probably expect. Um, and in that journey, I think one of the things that stands out to me was, like, it's a real privilege. I find it a real privilege to be a portfolio manager, to
Okay.
manage indirectly shape the future of clients' wealth and how they live their life. And also, in the wider aspect, shape the UK and global economy. By money has a purpose, and by investing into certain areas, you mean that those companies grow, and that's the real appeal to me. So yeah, which has kind of led me down to the path of managing money rather than client relationships. And I took it upon I didn't need to take further exams, but I did decided to take the CFA exams. I don't know if anyone in that room knows or about the CFA exams, but that's just out of a personal. Well, some people say it's a bit. You must kind of hate yourself to take the CFA exams because they are quite brutal. But
Okay.
wanted to kind of really just sort of prove myself, and quite frankly be the best that I can
Okay.
in the field that I love. So did those, and along the way, as more responsibility came my way, the investment director position was opened up, which basically means that rather than just manage the money, I have a responsibility and a kind of fiduciary duty for the and a regulatory duty to the business at overall.
Okay, lovely. And then just going back to a bit more of that qualification side, I remember speaking to you, I think we met at the ETF event.
One of the CSIO
Yeah,
events,
yeah,
it was
yeah, yeah, of
the
course.
JP Morgan one.
Yes, we met there, and your advice to me was get as much experience, but also as many qualifications as possible. And
Mm.
with regards to the CFA, or whether that be someone wants to go into corporate finance and they do an accounting qualification, would you recommend that highly, or would you recommend more, not just qualifications, but also experience?
Um, Experience number one. And I would say, I think kind of skipping ahead to maybe one of the a question you might ask later is, I think certainly early part of your career, um, do hop around. Go do an apprenticeship somewhere, or do a graduate role for a year, 2 years, and then even though if they tell you like stay on, you'll get a promotion, or the here's the pathway. I think you just have to sort of hop around to different companies if you can, and try and gauge, get a feel for the dynamics of the industry overall, how different companies do the similar things. Um, and also just meeting, forming good personable skills. I
Okay.
think that's always will be there, even in the age of AI. And then in clarification with the about qualifications, I'd relabel that to instead a broad range of accreditation, shall we say. Rather than doing an accounting course to get an ACCA, or to get a whatever it is. Instead, um, I mean, there's so many online courses now which are free as well,
Mhm.
and the best university is YouTube. I spent a lot of time on just like, and actually just googling, or rather chatting to the various LLMs. Just be curious to say, right, I don't know anything about a particular topic, but I want to be curious. I want to kind of really understand it. Let me do something. Let me start off the process by asking a few questions to AI. And then, if you feel like, okay, there's merit to me getting a bit more of an accreditation to this, you will probably find some sort of course on it, and generally quite free to as a taster. So machine learning seems to be a very popular one at the moment for obvious reasons. Um, so yeah, that's what I would suggest for sort of 20-year-olds, myself.
So just keep learning, really. Just put your head down, keep learning. If you have questions.
Yeah, curiosity and agility, to learn different things.
Okay. And then I think that moves on to the next question quite nicely is beyond technical knowledge, what skills matter the most to you in your career? I know you touched on now saying 9 years ago you stopped doing so much the client facing stuff. So
Mm.
maybe it's a bit more technical on your side. But what would you say other than technical skills?
So, like, soft skills will be there. I went to Amazon event. I was going to say, I don't know if people in that room know what AWS is, but Amazon Web Services. It's very much a tech-driven event, um, and slightly outside of my comfort zone, because I'm not a, a technical person, if that makes sense. Okay, so I know a little bit about coding, but not enough, nowhere near enough as the people in the event that I went to yesterday. But what was refreshing was that even they were saying, what, it's about how will humans use this? How will humans interact um, with an AI as the side buddy, rather than as the main thing that's going to replace your job. You know, I was looking at a few of the floor events where they had like AI in the retail space, for example. Like, how will AI change that industry? But the crux of it will still be that personable human skills of being able to understand context of someone and the nuances of what they're saying. So it's again maybe a bit of a cliche, but the talking to soft skills of being able to start some small talk and lead into sort of bigger conversations is still very much a really good skill to have.
Okay, perfect. And then another question on, I think, what the reason we met, and I've met people in industry, and from my point of view, I kind of know the answer, but I want to know your view on it. How important are going to these events and like broadening your knowledge? Not so much just broadening your knowledge, but also meeting people. How important is that? And would you recommend young people like myself and people in this room to do exactly that?
I think you already know my answer.
Yeah,
It's uh, this event would have never happened if we hadn't connected that way. Um, so there's always something and you don't want to get a yes from everybody. That comes part of the territory, but being able to try and start some small talk and is still, I think, very very important. And it broadening your knowledge from going to different events, which is exactly the same thing as like I said about chatting to an LLM or googling something and saying, "Oh, I'm quite curious about this. Let me try and understand from more about it." So going to an event, I think, is still quite important. And maybe the difference is that if you're googling things, then it's very much a uh, quite factual process. Whereas if you go to an event, try and understand the dynamics of practitioners in that room. If there are people in that room who are, whatever the topic is, involved with that space, try and understand from their point of view. And it's probably a really good small talk conversation to. It's like, hey, like, what are you seeing in the industry based on what they do? So yeah, that's quite important.
no, look, I think I completely agree with you. I think you've got to get out there. And then a bit more from when you were at university. If you were starting again in today's world, so maybe it was a little different, not to make you feel anything anyway like that.
No
What
offense
would you
taken.
prioritize? Yes, apologies. What would you prioritize if you were starting again in today's world?
Um, I think more industry, more events,
Okay,
more try and do more of that. I think hop around more. All the things I've said already, really.
okay.
I'd kind of prioritize some because I think you just learn so much more. I think there's a you know, you can kind of sometimes fall into a trap. Like though, if you look at you have my work history.
Mhm,
Um, I was sort of 4 years in one place.
mhm.
Uh, 5 years in one place, and then sort of 10 years in the last role. So instead, I would have looking back on it, would have liked to have done 2 years, 2 years, 2 years, and then maybe a bit more of a seen. You don't want to be seen as that person that they just sort of has a CV as long as your arm, but uh,
Yeah.
they to be to have a bit more experience in different places.
Completely. Completely. And then I think you've kind of answered the next question. Common mistakes you see early on in candidates when, let's say, you hire a analyst, or I'm not sure if you do graduate roles, but what would you see a common mistake? Is it not having good enough soft skills? Is it not being continuously wanting to learn? Is it something along those lines, or what would you say?
I've been quite lucky. I think maybe part of the vetting process, and maybe just I'm sort of very open and honest with all the people that I've mentored, um, in their career journeys. They've always been very good. They've all, in terms of, I think quite early on we recognize what they're good at and not so good at. And there's some who are very much more extroverted but not non-technical, and there's others who much rather prefer to be behind a screen and do the ins and outs, and really trying to understand and learn that quite early on and having open discussions with them to help them in their journey. I think that's always been quite so. Yeah, I don't know if that answers your question.
No, I hear what you're saying. Everybody's got their strengths and weaknesses, and you've got to play to your strengths. And then moving on to a bit more of you yourself and maybe your role, how do you see that evolving over the next 5 to 10 years? Do you see yourself continuing that role? I hate to bring in AI because I feel like that's all anybody ever speaks about now. But
Yeah.
everybody I've spoken to so far, this feels like it will only help their job, not hinder.
Mm.
Would you say that's the same with yourself?
Uh, how do I answer this? Um, I mean, I've taken like very big steps in that. Um, so okay, this is probably a good segue into my what I founded in the last 3 months. Um, so in the next 5 years, I would say that AI would be able to do a better job technically in creating a portfolio than I could.
Okay.
Okay, and in a very very quite efficient. It'd be very very efficient in doing so, but it might miss the mark in the context of what the human or what the client would be after. So, I'm jumping ahead in that journey and saying, well, look, if in 5 years AI is going to take my job, I would rather be the person who creates that AI than be eaten up by the job.
Yeah, I
So,
don't blame you
so I,
whatsoever.
I've it's a bit of a leap of faith. I have the domain knowledge, I believe, in the space, and that's embarking on a much more very different but very exciting journey in that aspect. Um, so yeah, no, I think very much the fact that the AI will change my job or potentially take it over, but there are tools and other things that I can do to help people who are transitioning that journey.
Okay. I think you've. I was going to ask next, what you personally look to do next. Is it continue as yourself as a investment director, or do your own venture? But I suppose you've answered that. So I think I'll finish it off with one more question before I open the floor up to questions.
Sure.
Um, what if you were? What do you look for as someone hiring? I'm not saying you necessarily hire yourself, but your office, your firm. What do they look for someone they want to bring in? What characteristics? Is that more soft skills that you look for, or is it more they have to have a technical base? What would you say the answer is?
Um, yeah, I mean, horses for courses.
Okay.
There are sometimes we've hired for analyst roles, which are more around research, and that in that aspect, it's about behind a computer, being able to uh, gather very disparate data and put it together into one document, and then to start asking why answers and trying to figure that out. And then there are other occasions when it's about um, the client relationship management, or just being the admin side of the client relationship management. And again, potentially speaking to clients, having that personable but professional manner about you. So I don't think I can answer that
Give
one
you
as
one
to
answer, yeah.
exactly what would be. But I think what I do look for, and in fact I have a test for this, is one asking a very awkward question to the candidate,
Okay.
and what I'm looking for there is just for them to put their hand up and say, look, I don't really know this, but I can give you an answer, but I don't really know the space. And that's probably the best answer they could give, because they rather make up an answer. And secondly, is to know, not be afraid to ask for help. Like, I put them in a scenario and say, look, here's this sheet of paper with a set of instructions, and there are various levels of difficulty that the instructions build up to. And I'll sit across from them and I say, like, imagine this is the office, a typical day in the office. Let's go, here's your piece of work. You do your work. I'm going to sit on my computer and do my work, and go ahead. And what I'm looking for in that scenario is, somewhere along that page, they will get stuck, and I'm looking for them to put their hand up and say, "Oh, like, can you help, please?" Because in the everyday place of work, we're a team. The sum of parts is greater than the individual. So, and that's a quality that I look for. The person who just says, "Oh, I really have to do this on my own because I'm being judged," that's not a quality I look for. So,
yeah, well, I mean, I think you've answered it perfectly in regards to, I think if you're joining a job coming out of university, you're not going to have all the answers. So I think putting your hand up and going, you're not quite sure what that is fine. So I'll ask if anybody has any questions. Sure.
Were mentioned earlier on about thematic investments. Is that more for like moral considerations, or just some people are more interested in moving their portfolio in a certain direction?
Yeah, I mean, thematic investing has become quite a core part of quite a lot of portfolio manager investment philosophies, because you can express your what's happening in the world in a nice eloquent way through thematic investing. So it doesn't necessarily I mean, it can be quite boring things. It doesn't have to be like exciting things per se, like cloud or AI or robotics. It can be quite things like commodities, like good old mining and copper and iron and other earth minerals, for example, because but you just have to have a reason why now for that theme, rather than before. So copper mining has been around for decades and decades and decades, if not maybe hundreds of years. um, and the difference is now that has accelerated because of a requirement for EV production, for AI infrastructure, through electricity transport, so things like that. So it's finding a reason of why a macro theme is growing, and then maybe working backwards and saying, okay, let's find. So that's the theme. So let's work backwards and try and get the exposure to that theme in various ways.
Yeah, perfect. Anybody else got any questions? Omar?
Yeah. Hi. Sorry. Which office are you based in, London or in Bournemouth?
Sorry, I didn't quite catch it. Am I based in London?
Yeah.
Are you based in London or Bournemouth?
Yes, London.
London. Okay. Quick question. You talked about the AI taking over, being more efficient in building a portfolio. I see that valid quantitatively, but not valid qualitatively, because I think the AI cannot cope with being able to qualitatively analyze data, linking macro factors with each other. So when you mention copper and you link it with EVs, and I link, for example, aluminium, EVs, soya meal or soya beans with poultry farms.
Mm-hmm.
And it's this type of connection that I think that AI will still struggle for quite some time before it can be able to catch up and include it in the analysis.
Is that the question, or is that something else?
Comment, or do you look at things like this in your work? You connect the market with the stock market.
I have to be honest, I'm going to disagree with you. I don't. I think the connection between trying to work out the qualitative data and then working to trying to find the exposure for it is not that far away. There are already platforms, for example, where you can, in pretty much live context, transcribe the earnings. So, for example, let's say a CEO of a company starts talking. Let's say Tim Cook starts talking about products and Apple and certain revenue streams, etc. So the AI will pretty much transcribe that straight away, work out how that relates to the earnings of Apple, and then it only takes another step from there to say, okay, well, if they are talking if they're talking a lot about AI being on mobile devices, yeah, rather than being on a server farm somewhere, then maybe the next future exposure is about having uh, what we call edge AI, i.e., AI on your own device rather than in a server somewhere that you can't see. So that's only a step away from trying to analyze qualitative information and then to be transcribe it to a quantitative piece of information that you could use for data. I'll give you one more example. Actually, I don't know how much time you guys have got, but happy to talk a bit longer. For quite a long time now, we're talking decades. Hedge funds used to pay a lot of money to get satellite information and then to look at, for example, agricultural farms to say like, okay, I wonder how much these farmers are going to produce of various crop in this season. Or a very famous example is people who take photos of the various car manufacturer car parks. So Ford's car park or Tesla's manufacturing plant car park, just to see how many cars would be parked outside. Because then they'll be able to gauge, okay, right, how many cars are Tesla producing this quarter, just by looking at that satellite data and saying, okay, here's a photo of the car park. Here's how many cars that were here on Monday. Here's how many cars are there on Tuesday. It's all data that can be changed from qualitative to quantitative, and AI is only going to accelerate that.
Okay, thank you. That's perfect.
Thank you. Perfect. Yeah, go for it.
Just going back to the AI taking over jobs, that kind of whole along that line. When you were dealing with clients face to face, how much value was made through those face-to-face interactions, through that social side? Like how, I don't really know what I'm trying to say, but like.
Yeah, no, I think I understand the question. I mean, looking back on it, I would say probably not very much. I think there is for sort of higher net worth clients, yes, because you need to the client relationship management is quite important to them to be able to understand, the business side of things. You're like, right, I want for them to really know me very well. Humans are humans, and if you're friends with someone, it's hard to say no, and it is hard to kind of disagree with various things that they're recommending, even though factually there might be someone else there who could just grow your money better. Maybe they have a better performance track record, but you won't necessarily want to move to them because you have a familiarity with that person and what they know about you. And there's a certain element of privacy as well. If you're a high net worth individual, you don't necessarily want to be sharing your wealth information to lots of people. So yeah, for smaller clients, not really an issue. I mean, have you guys heard of robo advisors? They've been around for maybe 15 years now.
Not so sure. I've had fintech. I think
Yeah,
that kind of.
so robo advisors are, I mean, you might have heard of like Nutmeg or Wealthify or various apps now on your phone where you can send 10 quid a month or something, and all it asks from you is how old you are, your risk profile, your income. So it's just collecting like bits of data information to make up an investment mandate, and then off it goes, and someone goes and does the thing. Like, so in that aspect, you don't need a relationship person at all. You don't need that soft skill. You don't get anything out of talking to someone that's got 10 quid, 10,000 pounds to invest. It's quite frankly, from the business side of things, quite a big waste of your time. But for someone who's got maybe 10 million, yes, you want to invest a bit more time, energy to really get to know them, because the more you get to know them, the more likely they're going to say, right, well, in a couple of years' time, they're not necessarily going to leave you because just because they found someone else with a better performance track record.
Just one final question from me, please. Right. How important is CISI qualification for candidates that can apply for some place like JP Morgan?
Yeah. How important is CSI? Tough one. I think it is necessary to have. I think it's good. Definitely, these professional bodies, they are definitely making more of a marketing to say, how important it is for to have these connections, to have the qualification, because it really gives you a good base knowledge of the industry. And I think that's just a good starting point thing. But to bring it up into maybe an interview and to say, oh yeah, like and hype it up, that's the wrong move. I would say. No, it's good to say, look, I've got data CIS exams, passed it, find it really interesting. Feel like I've got really good broad knowledge of the industry from a academic point of view, but now want to get stuck into the actual practitioner side of things and learn. I think that's how I would play that, rather than thinking, there is a, there's a, again, I understand why these professional bodies do it, and it is incorrect for them. I think it's a bit misleading. Of all professional bodies, that you do the qualification, and the next day job offers are just landing on your desk, and you expect that. When I started the CFA process, I was kind of in that camp. I was like, okay, right, I'm going to do the CFA, and then it's going to be like, I'm going to re-accelerate my career in a different direction. And but along the journey, I really learned, actually, no, that's not the reason I want to do it at all. And yeah, I can definitely tell you that after I got the qualification, I certainly did not have job offers landing on my table.
It's needed, but you can't rely on it solely. And Chris, sorry.
I'm happy to take any.
Another disembodied voice, Aaron. Thank you for speaking to. My name is Chris Parry. I'm one of the lecturers here. Thank you for taking the time to speak to my students today. Massively appreciated. Thank you for agreeing for this to be recorded so that we can show it to other people who aren't here. That's appreciated as well. I noticed that you did sort of reference, without referencing, two of the great thinkers. I think the quote that you were giving about missing the best 3 days, I think that's from Peter Fleming. The other one that you hinted at was, it's not timing the market that's good, it is time in the market that's good, which was Warren Buffett. Do you agree with the other big quote from Warren's now deceased mate Charlie, that it's actually not a loss until you take it? So at times like this, when the markets are sort of running around like headless chickens, it's just stay calm, stay in, everything will get better. And it's the panickers that leave now. Their portfolio's gone down by 32%.
Yeah.
If they stay here for another year, it'll be back up. Everything will be okay. Would you agree with Charlie on that as well?
Yeah, 100%. There are, I think Warren Buffett has mentioned this many times in his shareholder letters. In the how many years now? The 70-year track history of Berkshire Hathaway. The shares have halved, or pretty much nearly halved, at least 4 or 5 times. And his adage has always been, well, as long as you pick good companies and you stay the course, and fundamentally nothing's wrong, then just ride the wave and stay calm. And you only need to look at Berkshire Hathaway's share price to say that the proof is in the pudding. And the other thing I would, the secret I would say to my job, which I don't advertise too much, is that I would say probably 30% of my job is just telling people to be calm. The noise and the data and the macro and then all that information that I gather, part of this, the secret of the job is to gather all that information and then only say a few words about it to the client and say, like, yeah, this is absolutely fine. This is a bit that you need to be worried about, but this is not. This too will pass, and there'll be, we've had it during COVID, even big things like 2008 financial crisis or COVID, where markets halved or fell 40%. Hey, guess what? Those things passed as well, and look at the market now. So it's really very much about the secret that I don't advertise, as I say, is just to tell people. Half the job is just telling people to stay calm.
Yeah, take it chill, Bill. Nice.
Thank you, Aaron.
Thank you very much. Is that everyone? If that's it'll go.
Sorry, just a
Yeah, one more.
from Chris.
Sure.
Just highlighting, you're almost highlighting the fundamental side of, stock analysis. It's that idea that a company's fundamentals, if they're growing, stock prices will fluctuate. That's what comes with volatility.
Yeah.
A lot of the time, that doesn't equate to how they're doing, how they're operating as a business. So to speak.
Sorry, maybe I missed.
Do you want to say the question one more time? I don't think you can quite hear you.
I just missed the ending part of it.
Yeah.
It was just like, honestly, like following on from Chris going, the fundamental side, that's what matters more in terms of choosing your stocks wisely, and that the stock price doesn't kind of highlight the fundamentals, essentially.
Yeah, that's a bit. I mean, it's quite a simplification. Yes, you are right. Like, when there is a difference between the stock price and what you think are the fundamentals, then that is an opportunity to do something about it. Whether that be to sell or to invest. And I would just add in one more variable in there. There's many, but time horizon. If you're talking about looking at a stock and thinking, okay, I want to hold the stock for the next 10 or 30 years. Well, I think the first thing you should do, you should revisit your thesis for investing every year at least. It definitely doesn't need to be every month. You do your analysis, you invest, and then you say, okay, I don't really want to look at this. If I've done my homework properly, I don't look at this for the next year. But then to have a bit more of a longer time horizon about that. So again, just using Apple as a example. Yes, there is the quantitative fundamental data about earnings, about revenue growth, about user growth, etc. But then there are the other sort of factors, which is maybe which is more the art rather than the science, which is, hey, there have been 3 CEOs of Apple in the last in its nearly 60-year history now. So you could say, well, when Steve Jobs resigned, then that's a fundamental change. Like, I should leave. But actually, if you want to do your qualitative data and use that part of the fundamental analysis, but the team and the ethos of how Apple operates still means that it's very much a fundamentally very good company. And I think that's probably why a lot of Berkshire Hathaway shareholders will continue to stay on as Berkshire Hathaway shareholders, even after Warren Buffett said he's basically stepped down as chairman this year. So, if the fundamental of the team is still solid, that's just another reason to with a quantitative reason to stay invested into a stock.
Perfect. Well, I think that's all from us. So I just want to say thank you very much for joining us. Everything from how you started to where you are now, and then with regards to how it's a long-term game with regards to stock and you're buying into that company mindset. So thank you very much.
Fantastic. All right. Thanks, Oliver. And everyone else, have a good rest of the evening.
Thank you.